Hello, hello. Welcome to your 1 hour of the week in which you will be set up to make money for the remaining, I think how many hours? Over 100 hours in the next 5 days. So 1 hour that pays you for the next 90 something. I'm joined by my good friend Shy here. I am currently enduring the COVID. So excuse me if I'm being a little slow and a little dumb. My brain is a little foggy. It's very weird. I'll be honest with you, dude. Like I get COVID this weekend, and then the roaring kitty stuff comes back, and it was like I felt like I was right back there again. And it's been a delight. I'm not opposed to it.
Uh,
So, I was gonna start with the spy, but forget that. Let's just go right into. Let's just take a quick peek, see poo here at our good friend GameStop. See what's going on today. So, for those of you that haven't followed this trade, we've detailed it a number of times. The breakout buy on this one was the breakout right here over 12, 13 bucks back in the beginning of May. We gave you that one. We talked about it on the stream. So you should have been in this at 13 if you bought it. It then went to 64. So that's a nice 5X on your money. You're welcome. We then talked about bottom holding below 18, closer to 16. Didn't get that low, 1786. And then we started trending back up again before the Roaring Kitty post, which basically pumped the stock. There are rumors swirling right now that E-Trade is going to boot him. We'll see what happens. He could bring some welcome momentum back to the stock, or it could completely kill the rest of the run. Inflows today were actually about 1.5x outflows. Yet here we are with, I guess, not negative price action, because when you consider that we opened, we closed below 25. Was it like 21 bucks? It's still opened green, but anytime you see pump and dump open like this, it doesn't feel great. Did you follow this one at all today?
pure entertainment basis. I think I'll give E-Trade some credit. I mean, like I did the calculations. Like he's over a 5% owner now of GameStop. That's absolutely wild.
At least you have to disclose, right?
That's the thing. Like now it gets murky. Like if GameStop does run up and he cashes out those options, like his calls are like he's 2x in the money and like fat calls. Like there's some wonkiness of like what going forward, like what he has to file and that like going forward. It's just like a huge headache that as a brokerage side, like you don't really want to deal with maybe. So all I know is it's wild times, super entertaining. I would never participate in it because I don't have the stomach for it and it's just not my lane. But I love to see it fight, like seeing like some Joe Schmo fighting back because everything he's doing is at a different lens than what like all the big shots in Wall Street do every single day. Nancy Pelosi goes through her husband to make these trades, but essentially like she does it and it's totally fine. Like there's so many big whales who do what he's doing, but they don't care because they're part of the club. This guy is outside the club and he's just like every Joe Schmo that there might be some fear. Like, what if this isn't just a one-off? There's like 5 of these down like the next like 5 or 10 years. Like then we're gonna have a real problem because retail, like the love it or hate it, like the stock market has gone it's a lot more volatile since 2020. There's a lot more zero DTE options. There's just 24/7 trading. Like it's not the same animal it used to be before. And I'm sure the dinosaurs who are like on Wall Street hate that. And they also hate that the retail can like send in some meme overnight and the stock can, and $5 billion stock can double the next morning. And they just lost out on $1 billion in shorts because of one meme post. Like they freaking hate that. So it makes sense on why they're fighting back, and you might see some institutions of making it harder for him to like do what he's doing. But as a retailer, I love seeing what he's doing. Keep finding the good fight.
Yeah, I personally think it's hilarious. The part that isn't as funny is are the people that are losing all this money chasing this up and down. So again, if you're not following the stream and getting these levels, I mapped them out for everyone. I'll put the Discord link at the bottom. Like we've been giving you these, we've been going out of our way to make sure you have these levels so that okay, if I take this, it's a momentum trade only. I'm not just willy-nilly buying. For example, we talked about let me go look at what those levels were. I mean, shit, hell, I posted them on Twitter. I think Shy even reposted them. It's like there's no excuse at this point, guys, as to not having these, because at the end of the day, yeah, so we had over 27.5. It can go to 34, then 41, then 52, and then eventually 64 plus. Obviously, it hit 27.5, 34. It hit all those targets. And then if you look, it topped out where? Right below our third target, which was 41 bucks. Went as high as 40, 44. You should have known that rejection right there is going to send it down to at least 34. When it went below that, you know it's going to at least 27.5. And then would you look at that? We bounced right at about 27.5, 27.8. Then there's a nice 10% bump up, and then we're trading back down again. So again, we give you these levels not just to hear ourselves talk, but so that you guys actually have some idea of what's going on and how you can most efficiently trade this so that you don't lose money. Because right now you got to understand there's so many people in this stock that they absolutely want you to lose money. I mean, this is a playground for big money to rip you off, destroy you, take all of your money, and then laugh about it with their buddies. And they're going to take every single opportunity that presents itself to do just that. So please always understand that you're at a disadvantage if you don't have good information. Our goal is to give you the best information we can so that you can make an informed decision. So in looking at GameStop today, let's go back to the 1 hour here. We can see that we've had two different opportunities for this to gap up, right? The last time we opened at 25, went to 65, we sold off, and then we're going right back down to 18, which would have been long-term continuation from this little bit of move in early May. This is a sensible move from this point in time. This is insensible. But we also know that anytime this breaks over 24 bucks, it's got opportunity to absolutely rip. Now, depending on how active Roaring Kitty's going to be in the game, that changes things. As Shai said, like that's an intangible. I don't think they're really willing, ready, or wanting to deal with. Like today was notable volume. And so I think the question that I have, and I would love to hear your thoughts on this, is this Rory Kitty dumping his position?
I think so. Conspiracy theory, I think someone's backing him. I don't think that's his actual cash. There's no freaking world he has over $100 million in cash. Like, absolutely not. I think someone's using him as a vehicle to make some kind of alpha based on the momentum he had the past couple of weeks, highly short interest. Like, who knows who's backing him? Someone is backing him. So I think because of that, there's going to be some kind of sell because whoever's giving him this amount of cash, like, they don't care about the symbol or message he essentially is for retail. They care about making that money and making that bank. So like, I wouldn't be surprised if this is like a short-term squeeze. It's not gonna be like this massive month-long revolution like it was before. It's different vibes. Like if you remember before, like he had a full-on thesis. Like he was an actual investor in GameStop. Now it's more of like meme flexing, showing the large account. Like it's not the same.
Felt very crypto.
Yeah, it feels like someone's backing him and trying to leverage like something not sketchy, just it isn't as authentic and real like he was 2 or 3 years ago. So because of that, I don't think it's going to have the same characteristics as the last squeeze, and it's going to be short-lived. That's just my 2 cents, though.
Yeah, I could very well see that. So just for those of you that are watching, here's like if you want to see breakout, this trend line is going to be your new Bible. Above this trend line, and say there's still bullish opportunity to the upside. Below it, you're in a weird sideways consolidated, very uncomfortable price action. No bueno. And so, okay, this is a good question because this is where my head goes on the conspiracy side. The dude never really did anything on Twitter, right? So why all of a sudden? Why come out on Twitter, first of all? Second of all, why not? I guess what I don't get. It was all Reddit all day, all the time. Now it's Twitter at first. It's not even Reddit. Then suddenly it's Reddit.
I'm telling you, it's someone else. He's a puppet. In my opinion, he's just being a puppet. Someone's controlling him. It's a same stock, same name, completely different narrative.
That's really sad.
Yeah.
I think too, it's like, guys, it's something I learned early on, and I learned this in my sobriety. It's like nobody belongs on a pedestal. Because when you're early on and you're trying to get your life together, you meet these people, seem like they got it all figured out. You put them on a pedestal. The second they fall off, they lose all credibility, and that's not their fault. That's yours for putting them on it. I think the same thing goes for this guy. Don't forget that he's just as greedy and selfish, and as any one of us. And that if someone hands you a couple $100 million and say, I'm gonna pay you $50 million to make a post on Reddit, what are you gonna do? And I think we know what he's gonna do because he did it. So I don't know, but this is sad to say the least. But as far as price action goes moving forward, you do have a continuation of trend here. Should it stay north of $28, I would just kind of set that as a hard line. That's what I need to see for this to continue. We want to see this north of $28. Should it stay north of 28, let's map out exactly where we could see our next kind of areas of confluence, our pivot points, if you will. I would say the first one's right there at about 28.90. That's going to be their first kind of real support we need to form. And then beyond that, I would say it's pretty much anyone's game here. If we go back in time enough, we got to pull up the old chart data to see here. As you can see how this chart seems to go. Yeah, that's rough stuff. I would say that 34 is going to be an area of attention. What's that?
We can't. Are you trying to share your chart?
Oh yeah, my bad. I forgot that we had it on our faces only.
Oh, good.
So these are the real areas of contention that I have my eye on. So basically, and they've already been nailed. I already outlined these for you guys on the last couple streams, so you had these in front of you when this started ripping and running. The most recent occurrence, great money to be made. But right now we're trading right above this bottom line. Here's our midline 34. Above that we go to 40. We go above 40, then we can easily see another 20% here. But these are your key levels to watch. Honestly, I think this is only as good as how you trade it. And I think that right now, though, all this is worth is a momentum trade. Personally, it's not like a buy and hold for the mission and the narrative. Like, that's bullshit. You're going to get destroyed. I would really, really take some time and some thought into this. And like, again, so just for reference, right? This isn't brag or boast. We bought GameStop the first time at $5. I set my targets the whole way up. I mean, I'm talking from 30 to 50 to 70 to 80. I wrote it all the way to $400. At like $420, I was done. I was out. This is too much. Tape started to print differently. The money was on the table. I had to take it. It was 1,000x. We took it. I think it hit 5 something, never recovered. AMC bought it at 270, sold it at $73. It hit $77.30. If you're on our YouTube channel, you can go watch that live. I was live while that happened. I saw the block orders flood in, and I was like, I'm done. I'm out. It's over. That's recorded, timestamped. You can go verify that if you'd like. I'm not saying fuck the movement. What I'm saying is I'm tired of seeing people get fucked by the illusion of a movement. Anytime you see a movement, just know there is a political hand that is moving those pieces to their own ends, and they're either using you or they're against you. So you're either the fodder, right? Or you're the fall guy. It's one of the two. And that's how this whole machine works. Your job is to keep your head on straight enough and focus enough that you can take care of yourself, your family, your portfolio, whatever it is. Take care of your own shit. They don't care about you. They're not out to benefit you. They're out to screw you. More people, I would say, have lost money on this and AMC than I've ever seen on any particular stock or trading style or anything in the market ever. If this stays above 24.30, I'd love it as a buy between 24 and 25 with a hard stop below 24.30s. Ride it to 34, cut loose, and be done. If it breaks over 34, momentum trade to 40. Again, stop loss in place on every single part of the way. This is not something to buy, hold, and believe in, because whether the story's there or not is irrelevant. The truth is that there is something shady going on across the board, from the guy that you thought was on your team and was your friend to the banks and underwriters that are shorting it. Like, everyone's shady. Everybody's fucking around. Everybody's ripping somebody off. That's when you should be concerned. Too many variables, too many intangibles. I don't know. How do you agree with that, or what? What do you think?
No, 100%. I don't think this should be a long-term investment for anyone. I think this should be purely catch some kind of alpha, but even then, that's gambling. Treat this as gambling on a sports game. Like, it's pure speculative, and like, don't try to. I'm not gonna bet $2,000 on the T-Wolves on the Mavs winning, because I love the story that Irving's going to have a revenge on Celtics. Like, I'm creating that narrative for my own benefit. That doesn't really make sense for the gamble. Like, don't try to make sense of investing in GameStop. There isn't one. This is purely just another day in the office for someone who's backing this guy and they're trying to manipulate the stock price. So I'd stay away.
I would too. So, all right, I just want to get into that real quick for you guys because I know a lot of you are following it. Those are the levels. Let's talk SPY because we have crushed it yet again. Numerous 100% plus opportunities on the options trades that we defined for the SPY, following our ranges that we outlined. This one is, in my opinion, one of the easiest to trade because you can set and define these ranges very easily. We're going to run through this, running through those levels. I'd love for Shai to fill you in on some of the fundamentals happening and some of the macros in the market. And then we'll break down those independent options trades so that you know exactly what the calls and puts that are best to trade given the ranges that we outlined. So I would say first and foremost, we got our 522. That needs to be priced in as our bottom, with 518 being the fallback below that. Remember, we traded down to this 518 range. Then we went long at 518, looking for the breakout over 522. We got it. I believe we talked about trading the 526 calls as it ran from 518 to 530. Those were up 250% for you. So congratulations. Hope you took them, made some money. Again, if you're missing these trades, you need to get in the Discord. The link's at the bottom so that you get the live alerts and you get the notifications. Past this, I would say that we're going to see a real struggle here at 529, which is where we closed today. Buyers have really dried up there, but when we do get above, they don't really have much room. Sellers have pushed down from 532 with force. So basically our trade is very simple this week on the daily. It is, if we can open around 529 and we don't break out, we're going to go bearish to 522. If we break above it, we are going to go bullish to 533. I'll break down those trades. Let me get those trades pulled up. If Shai wants to go in some of the macros you could look at this week.
Yeah. So all right, I got a lot of questions about this today on SPY because they're wondering like why the gap down right at the open or why the gap up on Friday. So the reason there was a massive gap up, I really do think it's just people were closing their puts and it just caused some kind of mass move on the upside. And it was just month end close. Like, it was a lot of wonky reasons on why this market just went up 1% within, like, I don't know, 30 minutes on Friday. But this morning at the open, it kind of normalized all that price action because, like I said, it was not really anything fundamentally specific that caused it. It was just month end close, people closing their puts. But today, I did make a trade on SPY. And what was that trade? I mean, first off, we had a pretty brutal reversal on the intraday. And I've been very adamant, like, throughout these spaces, we meet twice a week. Like, there's a clear trend on this market that we've been in for the past this rally, the past 7 or 8 months. And look at the daily chart. Anytime the SPY touches a 21-day EMA, that has always been a buy. The only time that hasn't worked was when we had that 5% correction. I think it was the middle of April is when that broke down, and Austin and I were on the spaces. It's like, all right, this is character changing. Like, we broke the 21 EMA with ease, with volume. There should be some level of risk in the market. Well, it was a V-shaped recovery, and the SPY recovered that 21-day EMA, and it's held it since. So I think that was just like, okay, that was a weird boom, boom, but the trend is continuing since 7 months ago. Again, on May 30th, it tested the 21-day EMA. It bounced, and that following day, that's a green candle it had the following day with volume, which was Friday. Thursday, it tested 21-day EMA, bounced. Friday, we all saw what happened. There was a lot of weird, wonky month-end close stuff, but still with volume, it happened and bounced. Today, we sold off really aggressively intraday, and guess where it bounced again? The 21-day EMA. So this is clearly a trend that's like, when it hits this technical moving average, you buy. And I did a short-term 1 week out trade on SPY, and it worked out. Like, I made a 40% profit, but like, that's just kind of, you have to have that. I'm a long-term investor, growth specifically, 5+ years, but like you have to have a trader hat on when we're going through a period of time, like the summer months. It's totally normal behavior for the market really not to move much. Like there's gonna be some gap downs and V-shaped recoveries, but at the end of the day, we're at the point that we were at just last week. It's kind of going to be like that for quite some time, maybe, because there isn't a near-term catalyst to provide that next leg in a rally and that breakout. Because people don't really want to front run an election, which is 5 months away, and nobody knows when that noise of the election will start trickling into the headlines in the market of volatility or fear of who's going to win. Like there's an actual chance that both candidates, Trump and Biden, might not be on the ticket in 5 months. That alone, that even though there's like a 10% chance, that's some level of uncertainty that's going to create some volatility in the market. And we've SPY's up 11%, QQQ is up 12% already this year. People already made their nut for the year, and they don't want to risk it or get greedy. So I could see it just being a very quiet summer period. But if you're a trader and you have your trader hat on and you see a clear trend that's been in the market for 7 or 8 months, like the 21-day EMA has called out, you can make some decent amount of money with the market just not moving anywhere. So I do also want to call out, like, a rule that I have is the first 45 minutes of every single day, if the volume on SPY is above 10 million, that, okay, we have some actual movement in the markets. Like whatever we see action-wise, there's going to be some follow through because volume is there. It's been forever since we had that 10 million mark of the volume in the first like 45 minutes. Today we had 12 million. I'm not saying the volume is finally coming back to the market, but you can see the whiplash effect we had all day of up, down. Like it felt like lower highs and higher lows. Like it was just like kind of a lot of like new characteristics that haven't been there in quite some time. It's because I feel like the volume came back in the market today, not fully. Like we're still like a 40% haircut from the average volume, but the first 2 hours today was a lot of volume. And there's one other thing I want to call out. It was a weird character. It was like a new characteristic in the market today where the 10-year yield was down, but the market was also down. Usually those two things have been correlated during this rally. Like when the 10-year is going lower, the market goes up. Today, that was not the case. So I'm like, oh, that's something to know. I'm not saying it's like character changing the market, but like that's a new characteristic that I'm going to monitor. Maybe today is just a weird day, but that's what I'm monitoring. I'm monitoring the volume was higher than usual in the first 45 minutes. I'm monitoring that. 21-day EMA, it bounced again, but I'm keeping aligned with that trend to make sure it stays above it. If it doesn't, I'm going to be looking at the 50-day, but the 50-day is very close to the 21-day. So like feels like a consolidation is happening, but it won't take much for there to be a rug pull potentially. And I do think the risk is higher than the reward. So have it on your radar. I'm not saying sell everything, just be cautious. Like there is somewhat of a risk alert because today's action was weird and it was not the usual action we've seen in the past 8 months.
Yeah, dude, I couldn't agree more. I think that what we are looking at right now is hopefully more inflow. I mean, that's the goal. Is you want to see midsummer money come into the market now. I do think we are, like, they talk about like we're in a 24-hour news cycle world. Like I think the stock market follows that same premise that we're in a weird kind of like 24-hour stock market now. You know what I mean? It's not just the phone it in now, 9 to 5 business, Monday through Friday business days only. I think we're in a market where, you can see stocks get influenced greatly in after hours and even beyond after hours with this 24-hour trading nonsense. So let's take a look at it. So again, here's these ranges on the 5-minute, which you can see that is abided by them as if they were law. But again, we always want to stay on the 15 and 30-minute for confirmation on these levels. That's how we really trade these the right way. Right after this, we are going to get into NVDA. I see a few comments about it. I know everybody's worried and wondering about it. So we will get into that. As Shai said, look at that volume coming in end of day Friday. We got a little strength on the buy side coming in this morning too. Everything has gone, that's market on close, but even so, that is great news. So we tested off the 518 lows, which you had in front of you if you've been following the stream. Went to 522, level you had if you've been following the stream. High at 529, again, another level you had if you've been following the stream. So let's take a look at what we're going to expect coming into tomorrow's session. If we test higher and we fail, I got to change the color of that. That's Where's the thing, man? I don't see the thing that lets me change the color. There it is down here. So if we open green tomorrow and we get rejected at 529.27, our first opportunity is going to be on the put side, at which we will trade this back down for a gap fill to 524. That would be our first target. That gap is right here. We'd want to see that fill, which is very likely because we do have a nice consolidated support there, and we have a secondary gap right here. So double gap time. That's always a good place to start as far as targets go. I'm going to show you the chart, then we're going to go into the options chain to show you the exact contracts. So that would be our bearish scenario number one, and I think that is a likely scenario that could occur. Let's look at our bullish scenario, which would be similar open, where we open with strength, but we break out above that 529.16, which was this consolidated support level right here, where we've seen it go as high as 533. If we get confirmation on the 30-minute, which means the candle breaks above and then a new candle opens above this level, we are going to trade the upside to 533 plus. We will probably move higher, but we're going to set our targets at 533 to play it safe. So now we're going to flip over to the options chain to show you the exact contracts I'm talking about. On the bearish scenario number one, we are going to puts. I'm doing this on Robinhood because it's just easiest to show you. And most people use it, so it is what it is. Remember, we always want to have at least about 3 weeks expiration on our options. We're going to go for 18 days just because we don't want these to go over the weekend to 25 days following week. 18 days should be enough. Again, if this is a momentum trade during the day, you should easily get out of this with a nice bit of profit. These options will move pretty quickly, but it's not zero DTE where you're going to go to shit and get destroyed. So we talked about 524 being our strike. IV is very low right now, which is a great sign for us. Delta, we'll see some acceleration there on this contract, so we're going to go ahead and look at that. We're going to add that to the watch list. If this is too rich for your blood, you can open this as a spread where you buy the long 524 puts, and then you sell the strike directly below 523, which would turn this into a $34 trade. You don't gain as much, but you also have much less risk on the table. It cuts your risk down to about 10%. So that's our bearish scenario. Again, that was the 524 put dated 6/21 on the SPY. If we hit resistance of 529 and change in the morning, we close below that, which is confirmation that we got rejected. We're taking this 524 puts and we're going to make a fat little chunk of money on these. So let's switch over now to the call side. We're going to close these out. Same expiration. We talked about 533 being the strike there. These are even better priced, I think. IV's even lower, so that's good. So we have more upside there. We're going to add this to watch list so I can keep an eye on. This contract is $3.48. That would be our strike. To go back to the chart here. So again, that was the 533 call, June 21. To go back to our chart here, that is in our bullish scenario where we break out above 529 and change, and we confirm by seeing a 30-minute candle open above that key level right here. And let me find the example of confirmation just to show you what I'm talking about. So this would be an example of that breakout and confirmation. See how these candles push up? This candle opens above, closes above, sorry. The next candle opens above that line. We didn't see that breakout there, but this would be a very well-calculated trade. This is a second example. Pushed up, candle opens above that price, boom, shoots up. That's how we hit our targets on a bullish momentum trade. On the bearish side, we talked about, again, getting rejected right here. So that means the market opens strong. We get rejected at 529 and change, and then we see this come down close to 524. You've got the two options contracts for that. There's no excuses, no reasons not to make money on that. Again, these levels are as good as gold. We have some people following these every week and making stupid amounts of money. I definitely suggest you do too. If you need the live updates on the trades themselves, the Discord link's at the bottom. Make sure you get that. Let's flip over to NVIDIA here, which is, I know, why a lot of you are here, and then we'll get into some of those software names and talk about what we think is going to happen there. We got the gap up on NVIDIA. We held at 1135, so $1,135. I think NVIDIA is really showing some strength here. The volume's drying up a little bit. But again, blue sky breakout means exactly that. We have no idea how high this could go. There's virtually virtually no resistance, a little bit from 2 days of trading, but virtually none. Everyone is just waiting and watching in anticipation of how far this could go. And I think that the buyers that were scared of this at 150 when we told you to buy this in the first place, right? We told you, hey, we're buying this, we're buying this, we're buying this at 150. Nobody wanted to let, not nobody, but a lot of people thought that was crazy. They're very willing to buy it over $1,000, which is bonkers to me. And the real variable up in the air is the forward split and how it will affect the stock moving forward. You saw that with Apple and Tesla, where they reached a new high on the news, but then didn't recover that high for 2 or 3 years post split. So, is this the right time to buy Nvidia? Is the question on everyone's mind. What do you think on that?
I think it's going to hit 1,400 this summer. I think this is a stock where, on a fundamental basis, it's a no-brainer. On a technical basis, it's a no-brainer. It's a growth stock because it's growing triple digits with 50+% profit margins. That's unheard of. Yes, you can make an argument there's a cyclical nature to it. So the good times is temporary. Okay, well, management just gave us just a couple weeks ago, like, this party's going to continue until the end of 2020, till 2026, essentially. And their innovation window is just rapidly becoming quicker and quicker. That competition wants to stay at the table, and NVIDIA keeps moving the table, essentially. As soon as AMD thinks like, oh, we're finally here, we just launched our second most updated chip, like they just announced over the weekend. Well, guess what? NVIDIA just also announced we have a new chip even after Blackwell. It's coming out in 2025, 2026. So like, it's just going to constantly be innovating. And they have a component. I called this out again last week. Like, they're a growth stock, but at the same time, they're also a defense stock. And what I mean by defense stock is, if there's a lot of volatility and uncertainty in the market, like let's say VIX hits 20 and we're breaking the 21-day EMA, 50-day, and like we're still a decent away from the 200-day for the SPY. Like, where are people going to park their cash? It's going to be in NVIDIA, because you want to park your cash in a company that you know is going to deliver in the upcoming earnings cycle, who has that pricing power needle, and who is just like in their earlier than later phase of their dominance. So that's why I'm like, there's no weakness in NVIDIA in the next 2 years. Like, the only argument could be fine. There might be some margin compression because they can't charge the same prices they have right now because they have the first user advantage. So that's the reason, like, they can charge what they charge, and competition will eventually erode that. Fine. But by the time that happens, NVIDIA will be a full-time platform play, and it's going to be more of a software component now in their revenue stream. That's going to be much more weight than it is right now. And because of that, there's going to be a lot more recurring revenue and predictability down the line, where analysts can model out now 5 to 7 years out what NVIDIA is going to deliver, because software become like a third of their revenue stack, where right now it's such a small component, but they're essentially innovating so much that they're chokeholding the whole digital economy, that all their customers will have to like kind of use their platform, and it's going to be very sticky. And it's just like it's crazy the advantage that NVIDIA has, that I thought maybe like NVIDIA's, the way AI works is going to be an S curve, and nobody knows when the middle part's going to be of the S curve. Like that, all right, the demand's going to have to catch up now, because there's just so much pull forward demand that all the AI investments that all the big players made, they made the amount they needed to until the demand side starts picking up. Like honestly, like the next leg in NVIDIA's thing won't happen until the top of the S curve won't happen until the broad application layer of this AI adoption happens. And what do I mean by that? I mean, like we'll get into the software names, but you're clearly seeing like software isn't really having that Gen AI moment right now on the top line growth. And that's due to everyone's IT budgets kind of going towards AI investments right now. Like, they want to get as many chips as possible. They're worried about the infrastructure size, the servers, the compute, the hardware. Like, they're worried about all that, while also still worried about the broad application layer. But like, it's back of their head. They're all about the investment stage. And because of that, like, you're seeing so much pull forward demand on the chip side. Eventually that's going to normalize out. And when that happens, I think the normalization, that's when that broad application, the software names, really start picking up steam, where they're going to see the top line growth on their Gen AI projects. You're going to see a lot more pricing power. You're going to see some margin expansion. that's when that happens. I do think that might set up the next leg afterwards. Once the broad scale adoption happens, like now the next innovation of the AI space is going to happen for the hardware space, because it's not going to happen one time. Like this is a fluid movement. Like AI is 100% real. It's happening right now. It's staying, and it's going to be treated as like, all right, what's the next innovation on AI? Is it going to be AGI? Elon thinks the next year AGI is going to happen. I think that's way too aggressive. But like, is quantum computing going to be the next thing after AI? Yes. Like, when's that going to happen on the hardware space? Like, it's definitely not going to be back to where it was like 2020, 2019, 2020. Like, this is a brand new era in the digital economy, and hardware names are not going to revert back to, or not all, some will, not all of them will have the benefit of what NVIDIA is doing, but I think NVIDIA is going to be the king, and we're going to be living in a world where like NVIDIA is going to be potentially worth $10 trillion by the end of this decade. Like, I wouldn't be surprised. Like, someone told me, like, what's the NVIDIA price target, like price for you to think, okay, we're in a bubble? I'm like, I could see them hitting 2000 next year. If it hits 2500 this year, that's where I think, okay, we're in a bubble maybe. But we're not even close to that. Like, there's so much runway that NVIDIA being a $10 trillion company in like a year or two, like that's not wild for me to say. Like, I think that could be a case.
Yeah, it's madness, man. The whole thing is madness. Moving to one that we've gotten some questions about, so I think we got to talk about it. It's Dell. I've gotten a few questions about Dell.
Oh my God. Okay, so
I don't know what the hell's going on. I mean, my head's in space. Those COVID shit and the GameStop is too much, dude. So what the hell's going on with Dell right now?
Okay, so Dell.
This is an earnings fumble, right?
It's all right. So for what you have to know about servers, or specific, like this is why I was so bearish on SMCI, for example. SMCI has no IP. It literally has no moat. As a first user advantage on data center, it's like an interesting vehicle to capitalize on data center revenues. But they don't really have a moat. It's a low margin business. It doesn't scale well. Well, Dell, like, first off, let me see how much Dell has ran up. So like a lot of times when companies are reporting earnings, it's really important to look to the left on the chart. What do I mean by that? See how much is ran up before the print, because expectations are usually really high if stock runs up. Like right now, let's see what I think Dell's up over 100% for the year. Let's see what it is. Yeah, Dell's up 77% for the year, but they were up like crazy amounts. Let's see. In the past month alone, Dell was up 35% in the past month alone, entering their earnings print. So like expectations are really high. What happened to Dell's earnings? Well, they did well on the revenue side. However, the problem is margins. This is exactly why I have such an issue with these server companies. It's a low margin business. Like, doesn't matter how much they scale on the top line. Doesn't matter how much hype they get from NVIDIA. Like, there's only a certain level of like juice they can squeeze off this like AI theme, because it's such a low margin business. And the AI servers sales were like less than expected. And not just that, like they went up. I think their operating margins like barely nudged, even though the sales like went up a ton. That just shows the pricing power NVIDIA has, and also shows just like, again, there's not that much juice to be squeezed. Like, it's just, they had the AI optimized server like momentum because NVIDIA was just talking them up all the time, but like they're just, at the end of the day, like there is no operating leverage that Dell has, and you clearly saw that in the earnings report. So like, I think a lot of people just jumped the gun thinking like Dell is like the next SMCI, like it's their turn, like they're gonna have this massive growth story, like, and the margin expansion is gonna be explosive. Like, that's not the case. Like, Dell has a much larger base of suite of products than SMCI has. SMCI is just a data center play. Like, Dell has a ton of different other features, but Dell, again, like their operating margins barely nudge, even though the top line was growing a ton more. That just shows there's minimal leverage in their business model on the AI front. So like, they're not really an AI player. Like, they're benefiting it. It's a tailwind, but not to the extent that people were assuming when it was up 30% in 1 month. That is not Dell's forte, and like people just jumped the gun on that. So that's what happened in Dell.
Let me ask you this: do you think that like investors really missed out on any like notable growth you're going to get from Dell happened from the early 2000s onward? They didn't list until 2018. So
Really? Yeah.
is there even any meat on the bone?
I think people are just offsides. It's a classic story of like, where's the next pricing power needle? Like, it's
It's just
not.
because it's Dell. It's like, oh, they got IBM. They gotta. I don't know. And now the question is like, I feel like that's not. And maybe it is boomer money, and I'm wrong. But I have a feeling it's not boomer money. It's like a lot of millennials and younger Gen X investors are looking at these boomer names, going, "Oh, it's gotta,
No,
yeah."
it's the SMCI factor. People wanted the next SMCI, and they're both
Which
in
is
servers.
sympathy.
Yeah.
I buy it. Rule of thumb: I don't trade sympathy, dude. Don't like it. Don't care for it. It's nonsense. Like it's a quick trade, have some fun, sure. But sympathy's bullshit. If it's not the thing, I don't want. It's like there's a reason I don't go buy. Like you know what I mean? It's like you want to like go buy a knockoff designer thing. Like
So you
no.
brought up a great point, because I do think sympathy trading is going to be obsolete in a couple of years. Why do I say that? It's like a wild statement. There's going to be AI is going to cause so much consolidation in so many different industries that you kind of don't want to risk the biscuit by catching a falling knife, going for value, going for some sympathy trade because the king of that space excels. Like high tide raises all boats type thing. Like you don't want to do that, because I will like people. There's gonna be a lot of companies out there that are not going to exist in like 5 or 6 years due to this massive consolidation we're saying. So like, what do you finding value or catching a falling knife? Like, be cautious, because the days are numbered when that actually works. Like, it's not the same environment anymore.
Yeah, it's. Oh man. I don't know. It's just getting weird. I feel the same way. It's gonna be like at the end of the day, there's gonna be like 10 companies to choose from. That's like that's where we're headed, is this weird dystopia. I felt that way when I was at Vegas in this conference, and I was in that really nice designer mall. Uh, there's all these homeless people outside, and I'm walking around this mall that's like all like Louis, like Prada. It's all like top high end. The mall's so nice, beautiful, air conditioned. It's so hot outside. There's no one in there. It's virtually empty except for a couple very rich people. And I'm walking through there, and it's like these people don't even notice anything about this. Then you go outside, and again, you see
Oh,
it's homeless.
I
It's
will
like,
say what you're saying is so accurate. And I do think there's like, I don't want to call this out yet. There is an interesting play, I think, that's happening on those, like, you'd assume companies are just like, nobody's in there. It's home. It's just like dead zone dinosaur, but like it's been around for a while and there's no kind of AI narrative yet to it, but that could change. Best Buy. I think there's going to be a massive refresh of tech. Next, I talked to my buddy Paper Games. If you guys know him, like, it's all, he pitched this to me. I was like, that makes sense. Like, Best Buy might be a play of like, okay, so there's obviously a renaissance happening on brick and mortars. Like, you're seeing it like with the Abercrombie and like all these like people for some reason just like there's e-commerce, but like, there's a feeling of going in person, and just like shopping for it. But for the text front for Best Buy, there's gonna be a stupid amount of innovation on a lot of like things you would buy at Best Buy due to AI. An example was that you mentioned, like, so smart, like refrigerators. AI can disrupt so many refrigerators. Like, they'll just order and shop for you when they see that something's low in your fridge without you even knowing about it. Because just because you put it on auto renew, like on Amazon, I have an auto renew on certain items I know will run out every 2 months. I do that for my fridge. That's an example of like, boom, it gets ordered. It's partnered with Amazon. Amazon essentially has so many different partnerships with their Prime and the Grubhub. Like, someone will just buy it for you and deliver for you without you knowing about it. There's gonna be those kind of innovations on products that I was like, oh, that was dinosaurs. Like, that really haven't improved yet. Smart TV on fridges, that was cool, fine, but it didn't help the efficiency of living easier.
never
So,
understood that. Who cares?
and who cares about that? But like, there's gonna be a lot of innovation on it, and I'm not gonna say his full case because like he has a paid service. But like, watch out for Best Buy. And it's funny because someone stole his thesis in a double upgrade, the analysts, and that's why it's ran up a ton. And like, look at their chart. Like,
Someone stole whose thesis?
Paper Gains thesis, like he said on the yesterday, and word like verbatim, the analysts called out all the things he called out, in his paid service and just reused it and gave it a double.
Oh yeah, dude, that's all the time.
It's
You know
wild.
how often I see my SPY levels reposted? It's like they'll change it by like 2 cents to make it seem like it's their own work. There's one guy that he used to do it where he used to just screenshot. He would just copy paste my screenshot. He didn't even put in the effort. Like, dude,
Oh my God.
whatever, man. Tag me. Like, at least you know what I mean. It's like, come on. But that's what they do, man. If you don't have anything interesting to say, you just copy what somebody else said. They're idiots.
Yeah,
But,
so I'm looking at $100 calls. I think this hits 100 sooner than later.
Buy, huh?
Yeah,
I
so
actually like that. So you got long. I mean, this is long-term trend support. Look at that. That is abide. That is listen and abide and do as you're told type trend strength from 2013. This was interesting. This volume here too, I'd say.
it's my boomer trade. I'm a growth investor, but like
I love Best Buy. Dude, dude, going in a nice Best Buy, it just feels nice. And there are some elements that Best Buy has incorporated that I do think are smart that won't go away. So for instance, when we bought this house, right, the guy that owned it before us had put up like one of those big projectors in the basement, right? But he took the speakers. So it's like, hey, it's like a movie theater style projector. It's like, you got to at least get some speakers for that. You know what I mean? You can't be half-assing it. But I don't know what the hell did. So I go there and the dude comes out to my house for free and he like does some acoustic. It was all, the dude was super helpful, which shout out to my guy Brett at Best Buy in Highland, Indiana. That's my guy. If you're watching this, you're the best.
Those labor costs, that's not on Best Buy's balance sheets anymore. They outsource it to Samsung now pays for. Like all those expense for labor costs and all that, Samsung pays for because they want their product to get bought and all that stuff.
Oh, okay. Second example, I bought the Samsung Frame TV, and they did have some promotion. Like, of course, I was too proud to take advantage of it. I was like, no, I'll hang up my own TV. You know, I was just having one of those moments where I had to hang up my own TV, whatever. But they did offer it, free install. I just wanted it right then and there.
That's why, because now the OEMs are just like paying up for that because they want the products and many households as possible because the upselling obviously is massive to get in your house. But Best Buy's not on the hook anymore for that. So like their expenses are not as you would see on the brick and mortar side, like what all the labor costs and all these like OPEX expenses. It's not as bad as you think. I'm not going to invest in a long term, but when there's a clear inflection point, like you saw in their last earnings, like a couple weeks ago, and the AI narrative really isn't there associated, it's you're front running it. That's when you get some like real alpha, and like a 20% move in Best Buy is very rare. And if you capture before that happens, that's where like it's a similar fashion, like snowflake doubling almost, like that kind of alpha generating from 20% in Best Buy and 100% move in snowflake. You probably make the similar percent return because of implied volatility is way different between the names. So that's why I think it's going to be a magnet at 100. I think a lot of analysts are going to start revising their targets and like giving upgrades, all that jazz. And it'd be an interesting play, especially with the renaissance we're seeing on storefronts. Like it's really weird. Nobody can explain why we're seeing it, but it's obviously happening. And the amount of innovation we're going to see on tech products due to AI in the next couple of years, Best Buy's the last man standing that'll benefit from that in the traditional brick and mortar fashion.
Rest in peace, Circuit City, dude.
Yeah.
They could have had it all, man. Very interesting. All right. So you guys drop your tickers in the chat and we'll start covering them really quick. I wanted to take a quick peek at Snowflake, though. Oops. Take a quick peek at Snowflake here. Because you did see it mentioned in the comments. We are seeing I don't want to say capitulation, but it's
it's massive. It's for sure capitulation.
Okay. I didn't want to see that turn there. I was like, this is really starting to feel like capitulation, but it's also a dirty word you don't want to hear with any name that you want to go long on.
I mean, once it broke 148, it was capitulation. I think there was like a bottom. Like if you look at the chart from the graph from the bottom, and when was it? There was a bottom, and I drew the bottom graph. The bottom was in. Let's go on the weekly charts. Yeah, so June 2022 was the clear bottom. So if you do a trend line on the bottom side of that until now, we retested it in January 2023 and retested it in April 2024. We broke that and we're below it. So now, usually when something like that for that prolonged basing happens and you break the bottom trend, people capitulate, especially with like the frustration that stock hasn't moved in years. And that's kind of what we saw. So because of that, I think we're in a really interesting wedge that the investor day is tomorrow for Snowflake. Right now, the CEO is opening the keynote speaker with Jensen, like the CEO of NVIDIA. They're talking right now. Investor day is tomorrow. I can promise you there's going to be a stupid amount of AI products being launched this week in the Snowflake Summit, specifically tomorrow. When you have 35% of the Fortune 2000 data stored into your warehouse and you get an AI product-oriented CEO like the new one they just got, there's going to be some exciting announcements announced this week. And that'll be the near-term catalyst, maybe to show some bottoming action, because a lot of people want to be involved in this stock, fundamentally, long-term vision. Like if you're grew up in enterprise software, you're in that space, you're obsessed with Snowflake. You love Snowflake. You know the tech is absolutely real. The chart is scaring a lot of people from buying it because even though it's at 138, 140, like valuation isn't cheap. It's just normal in the software space now. Like it's not nosebleed high. It's just normalizing. And with the chart being this bearish and the valuation not being cheap, people don't want to like really go in until they see some EMAs getting recovered and some like near-term bottom. Hoping this happens this week. If not, I did put my price. I want to add 148 once that bottom line gets recovered again. 126, January 2023 bottom, and 114 is my June 2022 bottom. Like those are my three prices I'm adding. 14% position for me, so I'm overweight.
Say that one more time. You said what were they?
148 is where we would reclaim that bottom trend line in the graph that you just called out. That's when I would add even more. The next one is 126, which is a January 2023 bottom.
Yeah.
And the next one is 114, which is June 2022 bottom. Everyone and their mothers is waiting for this to hit 100 and break it. It will not go. It might go there. And it's not going to go there this year. It's already down 35% for the year. This product is best in breed. That's going to capitalize in AI. Like, there's no way it's going to go to 100 in this year. If it does, there's something I have to retest my thesis. There's something clearly wrong because that would be stupid cheap on a valuation basis, especially in the Rule 40 score of 50 plus for the next 3 or 4 years. Like it won't get there. I think the FUD is this once a year. There's always awful FUD around software. And what is FUD? Like it's fear and uncertainty. Like there's always like software is dying. There's software is getting replaced by all the big Google's, Amazon's, Microsoft. It happens once a year. And when that happens, there's always a massive pullback. And that's what's happening in the software space right now. Like valuations among software names are at a 10-year low. Do you really think it's going to continue even more? Like, no, like all the FUD you're seeing right now at 10-year low valuations, that's usually the time I pounce as a long-term investor. And that's what I'm doing. Like I don't have a cash position anymore. I've been buying up my favorite software names. Like this is a great fire sale we're having. Like Snowflake, I've increased to 50% the past month alone. Like I'm stoked that I'm getting to add these names, software names that are going to be a necessary place in the modern AI tech stack at these prices. Like I think I love it. Like, so knowing that the software valuations are at 10-year low, there's a ton of FUD out. That's when I always buy when there's blood in the water. I'm a fucking shark when it's during this time. That's exactly why I'm adding and adding. Like, do what you will. It's not financial advice. Just know, don't get scared off your positions or get scared off because you're reading headlines. Software is dead or Snowflake's not an AI player or whatnot. Like it's just FUD. So just that's all I want to call out. And those are my 3 points I want to add for Snowflake. We can talk about another software name unless you want to add anything.
No, let's just give them the smash or pass. Let's just do a quick 30 seconds on each of them.
Pass. Pass. So I call this. I wish I was on the spaces when I used to own this name. I bought it. I think it was like 6 months ago. Something was fishy. Fundamentally, this is a great company. Let me look them up. So they are essentially they had a 25% CAGR the past 3 years. Then all of us, and with 18% free cash flow margins. Again, they qualified for the Rule 40 score. Young company, like there's management was great. All of a sudden, nosedive in revenue. Why? Management was saying that Betty, their AI essentially product, was cannibalizing a lot of their revenue because the way that Paycom makes money is by errors on the HR and accounting front. So because this AI product is so efficient, it's cannibalizing a lot of these like errors and it's making them like make less money. So, okay, fine. In my head, I was like, okay, that's a near-term headwind, but that's going to create a much more stickiness on the products. Right now, they're more in SMBs. Maybe this Betty product can like help them get some large enterprise clients because it's a great AI product that's making them all these clients like save money. But then management said the same thing the following quarter. I'm like, okay, so this Betty product has been around for years. Why now is it all of a sudden cannibalizing your business like drastically? It goes from 30% growth to 23% growth to now 10% growth. That's excessive. So I was like, that doesn't pass on a sniff test. There's something fishy happening. It's either, again, like businesses, like first off, this week is a ton of jobs data. We're going to see how the environment is in the world on US and the jobs front. But like, I was like, all right, so I think a lot of people are struggling. The businesses are struggling right now. The environment is not great. Like, yes, the Mag 7 names are thriving. Like these big tech names are thriving, but like every Joe and Schmo SMBs, they're struggling. So maybe there's some near-term like people are laying off people. There's less people using their product. Fine. Say that. Don't say their Betty product is revolutionary and it's causing them to cannibalize their business. Like this has been around for years. You haven't explained why now is an inflection point that now it's cannibalizing. They never once said that. Even getting asked it, they kind of went around the answer. I was like, that's fishy. I think there's better opportunities out there. It's a 10% growth company, so I'm passing. And it worked out.
Bye. You're dead. Goodbye. SOFI.
So SOFI is it's a toxic relationship. I've had exes in the past that's just an absolute toxic relationship, but you think they would become something and they mislead you.
And then your car gets keyed. Your car gets keyed.
SOFI is that crazy ex-girlfriend where everything their management is saying, you want to believe. They're growing the top line a stupid amount for what their product actually is. They are just becoming a massive space within the fintech for like the Gen Zs and the millennials. Like they're executing everything you want, but the stock price is disconnected from what management is saying on the business execution front. Fine, that happens. But if you look long-term, what's SoFi's real moat? It used to be they're going to be the AWS of fintech company because they had the tech product. I forgot, blanking on the name, starts with a T, but like they had a ton of clients that interesting clients that would use that. So maybe they were just the AWS of all these fintech companies. That was exciting. And also a bank. But it's looking more and more like they were just like not pumping the stock because of that tech feature. It might just be a bank at the end of the day. Like it's trying to become a brokerage. It's trying to become this all-in-one financial app for millennials and Gen Zs. Fine, that's great. But I think that's more of a bank. And what they're doing really isn't different than what a JP Morgan can do, what a Bank of America can do. Like what's their specific moats besides a retail audience that's obsessed with their vision? And their UI on their brokerage is absolute garbage. Everything that Robinhood's been doing the past year, SoFi's been pitching, trying to do that the past couple years, but they haven't really followed through. Like they haven't really innovated the brokerage side. Their chief product officer, like it's like the marketing isn't doing great on like actually pitching these products. Like Robinhood is executing like the gold card. Wow, genius marketing. The retirement transfer of matching 1%, genius. Getting the older crowd. Like SoFi is saying all these things, but they're not really executing on the marketing front, like these kind of corporate strategies. And because of that, it feels fluffy. And I think it's.
And if you've got SoFi next to JP Morgan, I'm buying JP Morgan. You got SoFi next to Robinhood, I'm buying Robinhood. There's just no advantage.
100%. So like I think SoFi, I've always bought in the low sixes. I sold in $8. It's just been in that range for quite some time. Trade it as you must that way, but long-term investment, I mean, this has just been consolidating for quite some time. And I think the normal bank multiple is 1.5 sales. And I think there's better opportunities out there. Fintech's not the best place to be in right now. It's just a highly competitive, low margin business, minimal moats. There's not the only moat I can think about is PayPal due to their data advantage they have that they can like become an ad tech player almost with the amount of data they have on PayPal. So do what you must. I'd pass SoFi.
Chipotle post split.
I think Chipotle, Kava, Street Greens is a no-go. Something's happening on like the valuation front where it's becoming so overextended. It just doesn't make sense. However, if you want to specifically target Chipotle against Street Greens and Kava, that's a value play because Kava is stupid valuation. I'm seeing people like initiate positions in the 80s. I'm like, what are you doing? This doesn't belong above $50. There's a ton of narrative like this is the next Chipotle. This is finding Chipotle in the early stages. That might be true, fine, but it's getting way ahead of itself. Like, it's gonna pull back or consolidate because the valuation doesn't make sense right now.
Yeah.
Same argument with Street Greens.
I'm gonna tell you right now, I'm on the same boat. It's too high, too much, too fast. There's nothing left on the bone here. Let's keep going. We got Mara and Tina. What's up, Tina? This chart is interesting. I gotta give it to you. This one's been easy money from $8 every time. I've played this 4 or 5 times from $8, doubled my money, got out and went home. It runs to 40, 60, 82, and 27 topped out. Last one to 33. Volume inflows are good. What do you think from the fundamental side? How much you know about Mara?
Don't do it. There's some exciting. I shouldn't say don't do it. There's some exciting offerings they're about to announce. I know that for anecdotal evidence. But I don't know. Crypto's raging right now, and like Mara at the end of the day is at the mercy of what crypto's like doing. So if crypto's like killing it, and Mara's obviously disconnected from crypto's rally, like that's caution in my opinion. Of like, okay, so what if Bitcoin goes 40 or 50,000 or retest 50,000 again?
Yeah, what catalyst does it need to finally see that love?
Yeah.
Because I'm not seeing it either. I'm on the exact same page. It made no sense. It should be if it's tied, then why isn't it trading at 50, 60?
I know.
So I'm with you, Pass. I think there's better opportunities in the markets. Next week we're going to talk a little bit about commodities, or maybe on Friday we can talk commodities because I think there's some significant value there that everyone's just kind of ignoring right now. I don't even know what the hell this is. Flutter Entertainment.
I don't know what that is either.
But looking at this chart, you do have a little bit of a cup and handle there. I'll just say that below 207, this is a dicey play, and it just broke trend. So unfortunately, I would say that right there, bada bing, rejection, broke trend. Your next bottom is like 30, 40 bucks from here, maybe less if you're lucky. You got some gap fill to the downside opportunity. So unfortunately, I'm going to tell you right now, I'm going to give that. Oh, that was Zach. Sorry, Zach. That's our new intern. Let's give him a shout out, Mr. Zach. But I'm sorry to shit on your play, but I'm going to say it's a no-go. I don't know anything about it. Fundamentally speaking, though. Let's get into Palantir. Mr. Derek Phillips, what's up, baby? Let's get Palantir up in here. Has not seen the best price action as of late. Coming off those big moves to the upside, Palantir's really lagged in a pretty notably green market, at least the last couple of weeks. You're seeing the names Robinhood, Google. You're seeing all the like tech related kind of. They're not meme stocks, but they're talked about enough to be considered one. You're seeing green across the board because I think Palantir's in the same conversation with the NVDAs, the SMCIs, the Robinhoods, as far as traders talking about it. Yet here we are not seeing that appreciation and upside in the short term. Why do you think that is?
So they launched their AIP program a year ago. And that was like, first off, if you guys know what Palantir is, like essentially everyone labeled them as a consulting black box for the government uses. And they organize data in a curated form for like data analytics. So essentially I'm trying to think of a better way. They're a semantic layer with feedback loops that allow people to make decisions to data, and it helps provide enough information for you to make insights on the data that you have. And AIP, nobody thought Palantir can ever be successful at the commercial front because A, it costs a stupid amount of money to install them, a lot of capex up front. B, total black box. Like it's really difficult for deals of that size to get the sign-offs from all the people necessary, because all the people necessary to sign it off have to truly understand what the offering is. And Palantir is a difficult offering to like truly understand. Like they're, but all you have to know is that they're decision-centric, encompassing data type of play where they create these data fabrics for enterprises to become more important. I won't get into it. That's another session. We'll get into Palantir. But the reason they're struggling so much is because the inflection point in AIP happened 2 quarters ago. We saw 70% growth. I was like, oh my God, it's happening. The commercial phase is happening. And that was always like the doubtful point of what Palantir was. Like, will it actually ever get success on the commercial side? It was finally growing 70+%. We saw that gap up to, what was it, $30? And it's like, oh, it's happening. We're going to see the top line growth next quarter, because once all these commercial clients come in, it's going to take like probably 3 to 6 months to really see that uptick on the top line. Well, little that we found out where all these commercial clients are coming in, but they're not really spending as much as you'd think right off the bat, because they're signing up for it, but not really installing it completely, because it's cost us a ton of money, a ton of CapEx up front. And right now, the macro businesses are suffering. And because of this growth we're seeing on the commercial client front, and the top line growth is still at 20%, 21%, a lot of people are underwriting the stock. All right, they're going to guide up. Maybe it's going to go towards 23, 24%. And the CAGR from management from Palantir has always been 25% CAGR for the next like 3 to 5 years. Right now we're at 20%. So they thought that this inflection point would boost up the guide up to like maybe getting close to that number. We didn't get that. That just shows it's highly successful. Boot camps are working. People are adopting it. It's just they're not using it to get that top line bump that you'd anticipate, because of the large CapEx required. And it's something as revolutionary as Palantir is. Like, it's going to take some time to get the mass adoption within within that company to use it. So I think this is it's not going to break $20. It's just going to be consolidating, and it's an improvement mode of like, we're not going to get too excited until we actually see the commercial clients being reflected in the top line growth. And once that happens, I think it's going to be boom. Like, once it starts growing 25% with their free cash flow margins they have right now, like right now, the Rule of 40 score for Palantir is 50. And that's with 20% top line growth. If they go to 25% top line growth while maintaining 30% free cash flow margins, that's CrowdStrike level of unicorn status on fundamentals. And the way Palantir's business model scales incredibly well. Like, once you're installing Palantir, you're not leaving. And as you guys know about big data, like, it doesn't go away. It just incrementally adds on, and it becomes such a necessary operating system in your business that it won't go away. So the clear skies ahead. I think everyone's waiting for that earnings where we see that uptick in the revenue guide. But a near-term catalyst could be the S&P conclusion. Guess what the rebalancing is happening this Friday? The S&P. Will Palantir be included in the S&P 500? That'll be a massive catalyst for them, because they need that. Institutions were caught off guard with Palantir. And clear the AIP inflection point 6 months ago, they got excited and they started participating, but they're participating way later than a lot of the retail investors have been. This S&P inclusion, that's going to bring a ton of new investors and volume in the stock to propel it potentially towards $30. That might happen on Friday, so that might be a near-term catalyst to watch. But right now, I think it's in consolidation mode until the next earnings cycle.
Agreed. Really quick, I just got word from Mr. Pokey that this indicator is done. For everybody that's been watching the stream, just to show you some love and say thank you for following us, watching us, and everything you do. We're going to offer everybody on there a 5-day free trial. Payment info, all that shit's not needed. You just get the trial. If you like it, buy it. If you don't. I want you to try it, use it, and at least make some money, especially if you're going to be trading GameStop. You're going to need this. The link I just popped into the comments there. But definitely try it out. It's free. Get yourself some protection in this market and make some money the right way. So I just wanted to pop that real quick before we keep it moving here. We've got a few more that we can cover in time. What's our time here? 5:16. Path. This is a very interesting one, and I would love to hear your thoughts on Path, because I don't know if we've talked Path.
Such a tragic story.
It is, and that's what's breaking my heart right now.
Okay.
And my portfolio.
Oh, you own it?
I own some of it.
Oh,
Unfortunately.
fuck. I should. I didn't know that. I would have warned. So a couple people actually have been asking me about a path for this year, and I've always been
Yeah.
upfront with them. It's a potential risk of being cannibalized from AI, and the reason for that is like, all right, I'm trying to simplify it more. So UiPath's approach of offering like new solution, essentially pre AI, their whole approach was like offering these new solutions to old problems and relying on legacy systems. That isn't really the greatest advantage, in my opinion. Like with the rise of AI, like UiPath's opportunity for cross-selling due to his existing customer relationships are not the best control over like the vital data stack. I'm just their solution was to an old problem, and AI is kind of replacing. Like you don't need to solve the old problem anymore. At 10,000 foot view, like there's no that old problem is being solved by AI. So what can you do now next? That's the big issue with UiPath. And if you look at their earnings, it was abysmal. Like corporate governance, abysmal. Like CEO deserves to be fired. Founder coming in, fine. But like I think there's some like lying that happened where they were growing 47%, 20%, 23%. Now all of a sudden 9%. That's abysmal for a company that's labeled AI, specifically for automation. They're growing 9% this year. That's insane. That's a massive drop. Like I think this is some like I'd caution away from like don't catch a falling knife. Like this is a justified move down, in my opinion. Like this is where like even though the stock went down 40%, their valuation should have gone just as much as because that haircut on the top line. Like they might have a place in the modern AI tech stack, but I don't see it. It's just their primary thesis was like offering new solutions to old problems, and like they rely on legacy systems. Like you can't do that in the AI phase. So like I say hope that maybe they sandbagged it severely and find out next earnings cycle, but I would not add to this name. Penalty box it. They don't really have a sticky moat in the near term, no long-term advantage. It's a competitive industry, what they're kind of in. RPO isn't the best place to be in this AI space where you're seeing software valuations compress because there is somewhat of a risk that AI will be replacing a ton of software names. Path feels like it belongs in that category of like they're going to get acquired in the private equity down the line, and stock's not going to really go anywhere because we don't know if there's a moat yet.
Unfortunate is what it is. Looked great, well positioned. That happened. That sucks.
Well,
pretty much how the story went.
That's why you kind of like within software space, you can't just look at the fundamentals, technicals. You kind of have to like think the 4D vision of like, all right, with AI, like what can this actually become? Will it be a headwind or tailwind? A lot of the things that RPO is like AI can like kind of solve. Like UiPath essentially just lets people not do the mundane, like the boring, tedious little tasks. And was AI going to solve those boring little tedious tasks? Like that's like I'm trying to simplify as much as possible. There's a lot more tech logo I can like talk about, but like that's at the end of the day, like those little boring tedious tasks, like they're going to get replaced by AI. So like, what's UiPath's forward? But having said that, like let me pull something up. Right now, even after this dip, I could see a 20% bump from the price the rest of the year. So maybe they start recovering, I don't know, $14. They might recovering. That's like what the support was before. That might be a new resistance. Like on a valuation fundamental basis, like they are 20% cheaper than the pure average. So I could see that 20% bump eventually, but that's when I would get out. Like just better places to be.
Yep, that's what it's looking like. I was just looking to see. I don't have as many shares as I thought, which is good.
That's good.
I didn't have a ton. So it is what it is. All right, let's keep it moving here. You said Tesla, so we got to do it. We've talked
Tesla's
about this
strength.
a lot.
Strength.
Your only intangible here is the Elon vote. That's it. Public at 1.5 billion, now worth 50 billion. Whatever, make your decision. It said whether or not they're going to vote on his pay package, and if they don't, and you lose Elon, that's a big problem. We've talked about that at length. As long as Elon's here, it's a hard smash all day, every day, right here, right now. We gave you the buy at $140. You should be up 20% right now with a nice cushion. If you've been following the stream, if you're not, make sure you hit that notification bell so that you get the alert every time we go live, so you don't miss these. But yeah, I would say that Tesla's a hard smash for me. I'm assuming you're going to say the same.
Yeah.
So
until it breaks 140, it's a hard smash, in my opinion.
Yeah. So all right, let's wrap this up then. I mean, final thoughts week ahead. I'll tell you that I think we're just kind of going to see some chop. I don't really think we see much movement altogether. I think it's probably just going to be chop.
Yeah. So I'm pulling up my notes right now. This week is all jobs data. Like, it is absolutely filled with jobs data. I think Powell might be speaking on Friday, but it's a ton of job data that we have coming in through the market. So I think Jolts is tomorrow morning. So that's going to be the next near-term catalyst. I think that we have, at the end of the day, like, if you guys notice, the jobs data have been very contradicting of one another. Like, Jolts is bad, Challengers is good. Like, I don't really put that much weight into this jobs. Oh, here it is. So we have Jolts tomorrow. We have non-farm, ADP non-farm on Wednesday. We also have the ISM non-manufacturing PMI data on Wednesday. So Wednesday, and global services PMI data on Wednesday. So Wednesday's a busy day for macro data. Then we have the jobs report on Friday. So again, it's all about employment data this week, jobs data. So anecdotal evidence, white collar jobs are struggling right now, big time. I don't think we're seeing as much in the server side. In the data, we're not seeing it as much. But on the white collar side, I'm noticing in my own anecdotal evidence, and it makes sense. Like, after hearing I've listened to so many earnings calls this earnings cycle. Like, a lot of these software companies, like, they're saying the same message over and over again. Like, do what you want with that. Maybe they all met together and like, all right, guys, we're gonna have the same message this earnings cycle. Like, we all aren't gonna promise. Nobody's gonna guide up Q2, but everyone will guide up for the full year. Everyone promise. That's literally all it was this earnings cycle. Like, all these software names, these companies, like Q2 guide, and they bumped up their full year guide big time. What does that say? They're uncertain about the macro, and the near term might get a little rough. Like, I do think that business spending there was such a head fake on business spending in Q3 or Q4 of last year that ended up just being a ton of pull forward demand from Q1 in that period. And we're noticing the past two earnings cycles, like, business spending is still struggling. Macro is still struggling. Like, it's not the best place to be right now. Like, in the environment we're in, like, people are still struggling. And we're seeing it on the consumer side as well. Like, people aren't spending as much. Like, people are having streaming fatigue, like subscription fatigue. Like, people are shopping more at Walmart. They're going Target's slashing prices of 5,000 other items because they need customers to come in and spend money. McDonald's is offering the $5 value pack again. Like, things are not great right now in the market. And I really do think that eventually it's going to flow through the employment and jobs data, where people are like, there are definitely layoffs happening right now, and people are going to be experiencing the pain of that. So be cautious out there. But having said that, until we break the 21-day EMA on the SPY, I think business is normal. I think this is going to be like, we're not going to go, like, I don't think we're going to hit 550 until after the election, for example. Like, I really think we're not going to hit 470. We're not going to hit 550. I think we're just going to be pinned in this consolidation period for quite some time. I think any kind of dip is going to be a V-shaped recovery. And we're just in a weird, wonky time where low volume summer months, there's no near-term catalyst to provide us that next leg in a rally. I thought NVIDIA's earnings would be that. Clearly it wasn't. And that red day we had the day after NVIDIA earnings is a massive tell, in my opinion, that we're not ready for that next leg up. Like, we're just not there. And I do think there might be more risk than reward in the SPY right now, but I think this is a very high floor. That it's just, there's only a certain point that the SPY will correct itself. I really think that 475 is a massive, massive volume shelf that will never go lower than that this year. I think 520 for SPY is like we're pinned to that, where there's a massive floor in that price as well. I think that consolidation wouldn't be the end of the world. Like the 200 days at 470 right now, like it needs to the 200 day needs to catch up to us. I think some consolidation needs to happen. We need to maintain the 21 day EMA. But everything, having said that, like things are great in my opinion. Like SPY's up 10%, QQQ's up 11%. We just started June. Like there should be no complaining that we're going to have a consolidation period this summer, because it's going to be a volatile Q3. The election is going to be polarizing. Nobody knows what's going to happen. So enjoy the quiet time, because it's going to get stressful come like September.
I couldn't agree more. So to follow up on his thoughts, I mean, he nailed it. You got a lot of intangibles, a lot of events coming up. And you know my mantra is you trade what you can predict, reasonably so. That's not going to be everything. All of this is meant to deceive you. All of this is meant to destroy you. You are not meant to profit and make money in this market. You're meant to be the means by which the rich make their profit. But if you know that, and you can play within the lines of the game to make enough money and get out. That's my number one goal. If I could do nothing in my life in the markets, it's to at least like put this out there and tell the truth about it, which not many people do. That it's rigged. Of course it's rigged. It's all a scam. It's all bullshit. It doesn't mean you can't make great money, because you can. I mean, a living proof of that is you look at either one of our portfolios or the people in the Discord. Like, it's possible. You just have to know how far you can push it without taking too much or taking too little. It's about that nice little sweet spot where you can capture your profit, get out without getting screwed. And that's why we built the tools. Like I said, the free indicator. I'll drop the link in the chat again. Take advantage of that. It's 5-day free trial, no money down. Like, just use these tools, you guys. We spend a lot of time building them so that they can assist you in your trading, so that you can make better decisions. I'll also drop the link on Twitter. You can follow it there. Make sure you follow both of us. That's both the Penny Boys Stock Twitter and Stock Savvy Shy. Make sure you go follow both. Trade this safe. You've got your options targets for the SPY. We've already laid those out. You've got a couple great names we discussed at length as to why we like them or why we don't. We're here every Monday at 5 p.m. Eastern to basically serve you, to give you that alpha so you can actually make some good trades and make some good money. We'll be back 3:30 Eastern p.m., 3:30 p.m. Eastern on Friday to do some a little bit of live trading, get some option spreads for you. We're trying to hit I believe that would make this 35 out of 38 weeks that we've hit a net profit on our passive options trade. That's my goal. We love doing this for you guys. Love talking with you guys, getting to know you guys. So we hope to see you back on Friday. And if not, we'll see you back next week. Stay blessed now. Bye-bye.